In this video, we're exploring what happens when you renounce your U.S. citizenship. This is something that I'm considering personally, so I've really been looking into it, and it's a decision that has significant legal, financial, and practical implications. And we'll cover it all in detail: taxes, pensions, banking, travel, and more. Whether you're considering renunciation or just curious, this video will provide a comprehensive, fact-based guide. So let's dive in. Why do people renounce U.S. citizenship? The U.S. citizenship is one of only two countries alongside Eritrea that taxes citizens on worldwide income, regardless of where they live. This citizenship-based taxation can create financial burdens for Americans abroad. Compliance with U.S. tax laws like FATCA, the Foreign Account Tax Compliance Act, adds complexity and costs. And by the way, we have a video all about FATCA on the channel, so please subscribe. Some renounce to integrate fully into another country or to simplify their financial obligations. Regardless of the reason, renouncing is a serious step with lasting consequences. Renouncing U.S. citizenship means voluntarily relinquishing your legal status as a U.S. citizen. You lose rights like voting in U.S. elections, accessing consular services, and living or working in the U.S. without a visa. In return, you're no longer subject to U.S. tax obligations or other legal requirements. Arguably, the biggest loss is losing access to the U.S. labor market. U.S. salaries are some of the highest in the world, probably the highest in the world on average. But once you become maybe an entrepreneur and you're not dependent on a salary, the calculus starts to change. The process begins with contacting a U.S. embassy or consulate in your country of residence to schedule a renunciation interview. You'll need to complete Form DS-4079, a questionnaire about your reasons for renouncing and ties to the U.S., and provide documents like your U.S. passport, birth certificate, and proof of another citizenship. You must hold another citizenship to renounce, as the U.S. doesn't allow statelessness, which could leave you without legal protections. As a side note, if you're interested in citizenship by investment to aid you in this process of renunciation, MyLatinLife is a full-scale immigration consultancy. We help with citizenship by investment, citizenship by descent, residency, etc. And there's a link in the description if you'd like to book a call with us, become our client, and we can help get a second passport in your hands. Moving on, during the interview, a consular officer reviews your paperwork and confirms you're acting voluntarily and understand the consequences. You'll take an oath of renunciation, formally declaring your intent to relinquish citizenship. Afterward, you receive a certificate of loss of nationality, confirming that you're no longer a U.S. citizen. The process costs $2,350, a non-refundable fee, even if your application is denied. I believe they are trying to lower that fee because it used to be around $500 and then they raised it and then they are trying to lower it again. But there's a fee involved at the end of the day. The timeline varies, taking a few months to over a year, depending on your embassy's workload and your circumstances. Countries with many American expatriates, like Canada or the UK, may have longer wait lists. Delays can occur if paperwork is incomplete or additional information is needed. Once approved, the U.S. government notifies agencies like the IRS and Department of Homeland Security, cancels your U.S. passport, and updates your status. Now let's talk taxes, a major consideration. Renouncing doesn't erase past tax obligations, and the IRS has rules for expatriates. It gets really complicated. We've actually done a number of podcasts on this channel about renouncing and the rules around that, so you can search that on our channel as well and on the MyLatinLife Podcast on all podcast platforms. An exit tax applies to what's called a covered expatriate, quote unquote, defined as individuals with a net worth of $2 million or more. An average annual net income tax liability above approximately $190,000 for 2025, or those who fail to certify compliance with U.S. tax obligations for the 5 years before renunciation, meaning you have to be up to date on your filing and filing your yearly tax returns. For covered expatriates, the exit tax treats you as if you sold all the assets the day before renouncing. You're taxed on unrealized gains above an exclusion amount around $866,000 for 2025. For example, if your assets are worth $5 million, the IRS calculates the gain over your original cost. If it exceeds the exclusion, you owe capital gains tax on the excess, even without selling. This can create a significant tax liability, especially for high net worth individuals. There are people who are so rich, on paper at least, that they literally can't renounce because they don't have the cash to renounce. If all your net worth is tied up in the company, but you can't sell the shares of the company, how do you come up with the cash to meet the exit tax liability? That's why, like most things in the world of tax and exit tax and switching residency, the earlier the better, because the richer you get, the more complicated it gets. Non-covered expatriates, those below the wealth or income thresholds who've complied with tax obligations, face fewer issues. You must file a final U.S. tax return for the year of renunciation, covering the period up to the renunciation date, including foreign income and assets under FATCA. After this, you're generally free from future U.S. tax requirements. FATCA is a key factor in many renunciations. It requires foreign financial institutions to report U.S. citizens' accounts to the IRS and mandates U.S. citizens to report foreign accounts if their value exceeds certain thresholds. This creates paperwork and compliance costs. Some foreign banks literally refuse U.S. clients due to FATCA's administrative burden. Switzerland is famous for this, limiting access to accounts, mortgages, or pension plans. Renouncing eliminates these restrictions, allowing you to engage fully with your new country's financial system. Pensions are another critical topic. If you've paid into Social Security, you may be eligible for benefits after renouncing, provided you've earned 40 quarters of work, about 10 years. Renunciation doesn't disqualify you, but payments to non-residents in countries without a U.S. tax treaty face a 30% withholding tax. Countries with treaties like Canada, the UK, or Germany may reduce or eliminate this. Banking logistics can complicate access. Some countries allow direct deposits, while others require a U.S. bank account or third-party services, incurring fees and currency conversion costs. Private pensions, like 401ks or IRAs, remain accessible after renunciation, but challenges arise. Some U.S. financial institutions restrict services to non-citizens due to regulations. Managing or withdrawing funds from abroad may be difficult if your account is flagged as a non-resident. Withdrawals may face U.S. withholding taxes, and you'll need to consider your new country's tax treatment. Consulting a cross-border financial advisor is advisable to ensure access and tax efficiency. And reminder, there's a link in the description if you'd like to speak to us directly and we can get all your questions answered and put you on a path to renunciation if you're serious about it, or at least want to quote and want to get some professionals involved to weigh the pros and cons. Banking changes significantly after renunciation. As a U.S. citizen, FATCA limits your access to foreign banks. After renouncing, you're treated as a citizen of your new country with full access to local financial services. However, U.S. banks may close your accounts if you're no longer a citizen or resident. You'll need to transfer funds to a new institution before renouncing. Investments in U.S. stocks, bonds, or real estate can be retained, but non-citizens may face restrictions on certain accounts. Selling assets later could trigger capital gains taxes, and you'll need to comply with an IRS non-resident reporting rules. Travel is another key area. U.S. citizens can enter the U.S. without a visa, obviously. After renouncing, you'll need a visa to visit or live there, like any foreign national. Citizens of visa waiver program countries, like the UK, Australia, or Japan, can enter for up to 90 days without a visa. Otherwise, obtaining a U.S. visa can be complex, depending on your new citizenship and immigration history. Your passport determines global travel access. Strong passports like Canada's or EU nations offer broad visa-free travel, while others may have restrictions. Me personally, one of the reasons I'm able to consider this is because I have other Tier A passports. I have a Canadian passport, I have a European Union passport, and so I actually have 2 Tier A passports. There are people who renounce with just maybe a Tier C passport, Tier B passport. Maybe you get CBI in the Caribbean and you get, say, a St. Kitts passport and then you renounce. A lot of people do that, and maybe that makes sense for them. But re-entering the U.S. as a St. Kitts citizen becomes a challenge. So you need to think about, is that important to you, continued access to the U.S.? Family implications depend on your circumstances. Children born in the U.S. or to U.S. parents retain their U.S. citizenship unless they renounce separately. Your renunciation could affect their ability to live or work in the U.S. if they don't maintain citizenship. If your spouse is a U.S. citizen, joint financial arrangements like taxes or property may require adjustments. Regaining U.S. citizenship after renouncing is nearly impossible. The U.S. treats renunciation as permanent. You need to apply for a visa or green card as a foreign national, a process that can take years, followed by naturalization, requiring U.S. residency and eligibility criteria. There's no mechanism to reverse renunciation. If you're considering renunciation, take these steps. First, consult professionals. A tax advisor for exit tax implications, an immigration lawyer to confirm alternative citizenship, and a financial planner to reorganize assets and banking. Second, audit your U.S. financial and legal ties. Accounts, investments, property, debts, and obligations like child support. Plan how to manage these post-renunciation. Third, research your new citizenship's laws, including taxation, healthcare, and social services, to ensure they meet your needs. Common myths include the idea that renouncing avoids taxes or debts. The IRS can pursue unpaid obligations post-renunciation. Another myth is that you can never return to the U.S. You can visit with the visa, though obtaining one varies by case. I personally know people who have gone back to the U.S. post-renunciation, people with EU passports, Canadian passports, so it is possible. Finally, renouncing isn't just for the wealthy. While high net worth individuals face the exit tax, many renounce for practical reasons, like simplifying finances or committing to life abroad. And pro tip, in your interview, do not say you're renouncing for tax reasons. If you say you're doing it for taxes, they might deny your renunciation. Renouncing U.S. citizenship frees you from U.S. taxes and compliance burdens, but ends citizenship rights. It affects taxes, pensions, banking, travel, and family arrangements, requiring careful planning and professional advice. Ensure it aligns with your goals before proceeding. Thanks for watching this detailed look at renouncing U.S. citizenship. If it was helpful, please like, subscribe, and hit that bell icon. If you have questions or experiences with renunciation, please share them in the comments below. We'd love to hear from you, and we'll see you in the next video.